All right, we're going to talk about how to capitalize on a market bounce using a new unique strategy, one that you might have saw on Friday if you were around, how to clear your mind for tomorrow. Of course, we're going to share our game plan and Forex trades for you, as well as our full stock analysis. This is the Newsbeat Show. Good evening, ladies and gentlemen. My name is Mark Melnick, and I run the Newsbeat live room here at T3. I'm also the senior trading strategist, and just like that, we're going to show you a senior trading strategy. Now, I love titles, I love names, I love things that are like, oh, this one simple trick in the market is making me $1,236.17 a day. And the people will come out there with these ads, and I just look at them and I laugh so hard. They think that they're actually pitching you by literally showing you this weird, arcane number like, oh, wow, they got their strategy down packed. It's not like how to make $500 extra a day. It's like, how do you make an extra $573 a day following this one simple trick that nobody on the earth could have discovered with the exception of me? So click here, click, 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 click. No, we're going to make it easy. We're going to show you how I made over $2,500. You ready for this? Using 100 share positions. And I only bought any stock once for 100 shares, and I showed it once for 100 shares. So I'm going to simply actually show you a strategy and how it works, how you can approach it, how I approached it, and how we made money. So if you're listening to the last Newsbeat show, I basically said on Thursday night that Friday was going to be an up day and that we're going to be able to buy into the market for a potential rally. It ended up working. I'm not right 100% of the time, but I wanted to bet on it. How many times, let me ask you, how many times are you afflicted where you feel the market is going up, for example, and you're just unable to capitalize to the long side? I suffer from that. I am a trading veteran. I have been at this game over 19 years. I've made tens of millions of dollars as a trader. However, what happened? What happened that somebody who's been trading over half his life, I've been trading since I was 19 years old. I am 38. I've been trading half of my life, ladies and gentlemen. How is it that somebody with my experience and my discipline, why was I unable to catch the up move in the market? And that was going to happen again, and it was going to happen on Friday. I was going to have no idea what to do. I'm going to show you exactly what I did do. I did it in real time. I shared my positions with the entire room. They were able to track it in real time. I'm going to share with you the good, bad, the pretty, the ugly. It's not just good, bad, and ugly. Actually, there was really not much ugly. It was just good, bad. It's like the good, bad, and the pretty is pretty much what it was. And I just said, you know what? And it was funny. So I bring up my position box in the room, and I'm like, look, all right, guys, you guys are going to tell me what to buy. I want you to give me a name that you think can go up if the market goes higher, which is basically a market moving name. We're not looking at a dollar biotech company, a $2. We're not looking at, a specific weird name that's moving down today. Just general market names. And with 100 share positions, I made $2,500. To me, that was one of the biggest successes. I had a day earlier in the week where I made $12,000, and it didn't feel half as good as what I did on Friday. Even you guys in the room were listening, and you were like, wow, look, Mark is having a lot of fun. Damn right I was having a lot of fun, because it was a lot of fun. So let me tell you exactly what happened, how I went about it, how I capitalized on the market, and what I did on Friday. It was actually, in my opinion, quite amazing. So this is what happened. This is a 5-minute chart on the Qs. And this is what I was watching here. And then what happened was I noticed The market put in a 5 minute green bar. I'm doing nothing. I'm sitting on my hands. I watch the market shoot up. I'm like, oh yeah, we should go higher. Oh, look, we went to day lows. We put in two red bars here, and then we just started grinding higher. Green, 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 red, green, red, green, 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 red, 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 green, red, and it like frog in a blender. Or I think somebody has given me a more eloquent solution. I don't know. Kermit falling off his bike and scraping his knees. Um, you know, broccoli with some ketchup, whatever it is. I noticed I'm very big on statistical analysis, so I said, you know what? I want to try something. I want to try something new. I'm going to try buying. Like when you see this chart, what do you think? What if on this chart, on every 5 minute red bar, on every 5 minute red bar that closed, you bought 100 shares of something, anything. I don't care what it is. I attacked some of the big names. I'll be honest. How did I make, how many names did I end up buying? Like 14, 15 names, 100 shares each? Maybe 10 names? I don't remember. I could look it up. But what I did, the impressive part about what I did was I was just buying names that the room was throwing out, that you guys were throwing out at me. So what I did was I watched the market go up, started climbing above moving averages here, and I missed this entire bottom of the Qs. Then I said, you know what? Every time we put in a red bar, I'm going to buy one or two names. A 5 minute red bar. So guess what happens? Right over here, 1050, we put in a red bar, I buy 100 shares of something. We put in another red bar, I buy 100 shares of something. Another red bar, 100 shares of something. We put in a green bar, ignore it. Put another red bar, 100 shares of something. Put another green bar, ignore it. Red bar, 100 shares of something. At this point, so the market went down and I kept buying 100 shares. So you have some obvious questions. Well, how much were you down? I had a position of Amazon and Google, and I was down like $300. And those were just two of my positions. I had a bunch of other positions that were slightly down, and I really mean slightly. Because what happens is on these red bars is I'm actually just buying a pullback in a bullish market. So then the market shoots up here and I'm up. I'm up maybe a grand or so. Market falls down, market pops up, I start buying on this red bar, I bought on these red bars, and I just continued buying red bars. At the worst case scenario, I think if you guys remember how many names I was in, it's probably in like 14, 15 names. I ended up losing money on one of them, and it was like $7, I think, on Teva, was it, that I ended up losing money? One name out of all of them I lost on. Why? Because the market headed higher and I was buying market moving names. At the worst case scenario, what was I down the most? And I'm holding, keep in mind, Netflix, Nvidia, Amazon, Google with an L, not that it matters. I'm holding Apple. Did I buy Facebook? I don't think I bought Facebook. Maybe I bought Facebook. I think I did buy Facebook. So I just took the biggest, sexiest known names, right? Like the FANG names, Facebook, Apple, Amazon, Netflix, Google, and a bunch of other names. And you guys were just literally spitting them out. I'm like, okay, guys, when the next red bar comes in the market, what should I buy? And you guys are just spitting out names. Bristol Myers, Teva, Micron, AMD. And I jumped in almost every single one of the names you guys were trading. So just to show you, it was completely brainless. Not that the names you chose were brainless, but for me it was a brainless exercise because for me, there were so many green and red bars, it was impossible for me to predict when we were going to break out. Did you think I knew right over here at 11:25 a.m. that we were going to start breaking out to the upside? I couldn't time it. I admitted it. That was one of the hardest things for me to get past this strategy psychologically. I said to myself, I cannot predict when the market's going to break out right now. But since we're putting in so many green and red bars, why don't I just buy anything at the bottom of a red bar and just let it go up? I ended up making $2,600 on almost no commissions. Like I literally traded like what was it, 2,800 shares? Because I just literally bought 100 shares and I sat on it. Had I traded it perfectly, I ended up leaving the day at 2 o'clock. Had I literally stuck around till 4, I would have been up around $5,500. I did the math. It was around 5,400 and change. I would have been up almost $5,500 on 100 share positions, swinging 100 share positions intraday. I kid you not. The worst case scenario for me was I was down $1,000 intra position. So if you want to ask where was my stop, that's the funny thing. I don't actually have a good answer for that. Most people think that you need stops and that's what makes you an experienced trader. I think stops are one of the biggest sucker moves in existence. Now, a lot of you are saying, I wasn't taught that by the BS class that I learned. I was told you always need a tight stop. You always need a 3-to-1 risk reward. Traders who talk like that are probably not making money. Now, was I going to blow up my account? No. But in my head, I had a mental stop on it all. In my head, I was like, all right, if I'm down like 2.5, maybe 3 grand, I'll dump it. I'll just start taking the loss. I'll admit, you know what, even less. If the market lows are able to hold at this point after I started buying here, if the morning lows held, if the stocks went all the way down through the morning lows, I would probably be down around 2 grand. I would have just dumped it. Wouldn't have had to done with my. It wouldn't be based on my P&L. It would have been based on the market overall. And generally, the stocks I bought would have drifted down if the market went lower. However, I thought the market was going up, and I wanted a lower risk, higher reward way of playing it. And that's what I did. I literally just said, okay, instead of scalping all day, jumping in, figuring things out, trying the hard trades, I'm just going to buy anything I want when it has a down candle. Major names. And that's all I did. And it was a very simple strategy. And if you're able to adopt that sort of mindset, it will work on days where you see the market grinding up. If you feel the market's going to grind up, it's a very easy way to play it. You just wait for a red bar and buy. And you're buying so small, like while I was watching my P&L move, I wasn't even nervous. I was sitting there, I'm like, I have a bunch of little 100 share positions, like, okay, I'm not going to get killed. I'm completely diversified. It's not like if one name had a negative news article come out of left field and the stock started moving, I wasn't going to get killed on everything. I wasn't in, all my eggs were not in one basket. And I know that's a very, I guess, cliche saying. All my eggs were separated in a multitude of baskets. So the chances of a fox finding all my eggs were very low. And that is all I did. I know I make it sound so easy. I know I'm making it sound so simple because it is, ladies and gentlemen. It really is so simple. I stopped the strategy by 2 o'clock, but the truth is, if I continued the strategy, I might have made $10,000 that day if I literally bought every single red bar with 100 shares in a different name. I even tried to buy Priceline, which is now called Booking. I would have made like 25, 30 points in that if I got filled. And I'm literally getting filled on the bid. I'm not even hitting the offer. I'm in no rush. I'm trading smart. I'm trading patiently. How many of you guys trade Amazon, Nvidia, Netflix with these larger spreads and you're like, okay, I just want to get in. I'm just going to hit the offer because I don't want to wait. That's generally a bad idea, and you know that. So I was literally just throwing in bids like at the best bid. I literally said, okay, the market pulled down on the bid. I'm buying Amazon. There's $1.50 spread in Amazon, which is normal. I mean, the stock is, obviously trading at $1,500, whatever. And I literally just put a bid and I got filled on the bid while the stock was pulling in and printing lower as the market put in a red bar. It was a very simple strategy. It was a very fun strategy. Everybody in the room was enjoying it and making money off of it. And, we were able to capitalize. So Very, very simple. If you see a bunch of red and green bars and you think we're going higher, why not just buy after you see the red bars? That is really the entire strategy. Sorry, I'm making the fact that making money is so easy when you're able to predict the market grinding higher, but it is. And you could approach it intelligently. Imagine I was trying to buy these breakouts. Imagine you were trying to buy it on the green bars. You would have gotten probably stopped out. You would have not made as much money. You would have been a lot more nervous. So it was even the way you approach it was much more intelligent. And yeah, as you're pointing out, I sold too early, but that's okay. I was trying a new strategy for the first time, and obviously I cannot disagree with that. So, all right, now we're going to. Usually, I tell you either a story about my life, how to clear your mind tomorrow, how to get in that Zen state, so to speak. It's kind of funny because traders, you're really only as good as your last trade. I mean, that is the fact. It's not like you really are coming in with a strategy so much. It's not like, you're coming in every morning and you know exactly what to do. That's what people misconstrue about professional traders. You think we're coming in and we know exactly what we need to do. All right, I'm going to come in tomorrow and I'm going to do this and this. And if this happens, I'll do this, this. No, the truth is, the majority of the time, trading is chaotic. It's just about identifying things in your head that are intelligent. That is all it is. If something is logical and intelligent inside your head, it's probably a workable strategy. So I'm not going to drop the name of the firm, but, pretty much the last name of the firm rhymes with Rax. Let's put it that way. So I'm sitting there with a bunch of people who have IQs that are far higher than mine. And we're designing an algorithm. And I'm hired to basically help design parameters and things like that. And I basically come to them and I basically say, and I'm like, look, you're showing me all these strategies, this. And I'm like, you know what? If I could sum up everything that you guys are doing with all your parameters, all you're trying to do is do something that sounds intelligent and logical. And they all looked at me and they, laughed. And I'm like, that's all you're doing. You're just trying to do logical, intelligent things. So, of course, they look at each other because most of these people have the social skills of, like the wall that's behind your trading desk. And they just like, like some of these people, it's like, have you seen sunlight recently? It's like a beautiful day outside. You should go out and, breathe some fresh air. So I basically was telling them this and they didn't understand what I was getting at. So that's really, how I developed a lot of these strategies. So I'll come to you and I'll say, okay, for example, on Friday, like the market is moving higher, right? I'm not going to be able to perfectly, sometimes I do it. I know I'm known to do it a lot of times where I could call an amazing bottom. Like, yeah, I do that. But what if I didn't want to just sit around and wait? What if I wanted to throw some risk on the table and try a new strategy? What could I do? And I literally looked at this 5-minute chart, which is right in front of your face, and I said, you know what? You have so many green and red bars. You're trending up. The volume was also low, so it was unlikely, as you're mentioning in chat there, Gills. The low volume is why I thought the market would also grind higher. So yes, it's not like I saw these tremendous volume flushes. The volume was basically tapered off for the majority of the day. So it was less likely that we were going to flush. So yeah, there was some thought process in it. But if you felt the market is going to go higher, which is, let's just be honest, if you're buying anything, I don't care what it is, Amazon, Apple, Facebook, Netflix, Google, any other of the thousands of names out there that aren't like a small biotech per se, which does its own thing, you're basically betting on the market going higher. The market goes down, Amazon pulls back, Apple pulls back, Netflix, Facebook pull back. You're buying it. It's because you're ultimately predicting the market to go higher. So if the market went lower, your trade would probably still go against you, even if you bought it on a pullback. So just by remaining logical and intelligent is really the strategy here. It's not exactly when or where or what you're doing. There's a lot of that in the news field, and you guys, know that better than most here. That we do nail like really phenomenally hard plays and high conviction ideas, but if you just approach the market on any given day where nothing special is happening, like Friday, and you just basically say, I want to buy the market here, but I want to buy it on a pullback. You're buying a stock on a pullback thinking the market's going to go higher. Is that an intelligent, logical idea? You're taking small size because you're trying something new. Is that an intelligent, logical idea? You're waiting for the market to pull down again and you're giving yourself the ability to add new positions, new 100-share, very small positions. Is that an intelligent, logical idea? And ultimately, the answer is simply yes. So if you approach the market where, I'm placing bids instead of whacking the offer on a big spread stock like, Amazon or Nvidia, is that an intelligent, logical idea? And if you approach the market tomorrow and you simply tell yourself, I am going to do something that's intelligent and logical, I think you're going to see a major shift, a major turnaround, not only in your P&L, but your career as a whole. So that's what I wanted to share with you guys today. Yeah, Sale was our favorite stock, Earl. Oh my God. Hit 23. Yeah. So this is my largest position. It was my favorite stock from 2018. If you guys read my Melnick report here, and it's my favorite stock. Only one. My favorite stock of 2018, and the current price was 14.50. We're loading in shares. I put a first. Keep in mind on this one, it was different than Stitch Fix. I actually put a first target of $30 and a second target of 45. So I do think it will go through $30. However, that would be a seven-figure trade for me. And so far, I haven't sold a single share. So I'm up 50% on it. I'm obviously very happy. I think this company is going to, the truth is, all right, thank you, Kathy, for congratulating me on this. And there's a lot of people in the room here, too. But let me put it this way to you, Kathy. This shocks me. Not the fact that we're at $23. That doesn't surprise me at all. But how we moved up, I'm just as surprised as you are. Did you think that I looked at sale and said, we're going to have 10 green bars in a row? Of course not. This company decimated the analyst on earnings. Does that surprise me? Of course not. Why? Because these analysts got this company wrong. How did I know? I did my due diligence and I did a better job than them. That's why they were so off, all these analysts on SailPoint. That's why they had no idea. They were like, oh my God, they blasted off the earnings. All the analysts, were shocked. They were sitting there like, oh my God, I didn't see that coming. We here in Newsbeat Live obviously did. So again, congratulations to everybody in this. All right. So we're going to go ahead and share our game plan and our Forex trades. Just very simply here. Got a couple names here. QCP, which was a REIT that exploded up on Friday. You can just see right here, just blasting through the 200 moving average. Again, I don't always trade these names, to be honest. I more give them for just people who can't spend a lot of time in the market and want to see like a strong stock per se. And a lot of them work well, and I know I get such good feedback from you guys, so thank you. I would look for a break of 1642 tomorrow. Very simply put on QCP. And of course, the next one I'm going to give you is TTOO, which is T2 Biosystems. It's a diagnostic and research company, and it's been just, had a really nice breakout there on Friday as well. You could just see this stock just breaking through every resistance level, all the moving averages curving up, and just a very simple bullish trigger at $6.49. For those who wish to copy our live Forex ideas, right over here, you could go ahead and hit print screen now. If you miss it, you can watch the video again. It's public, it's free. I share with you my live Forex ideas, and you could go ahead and copy them and scale them any way you wish. Or you could just use them, of course, for educational purposes, which is why they are always there. But here are my live Forex positions. Okay. And now, of course, we're going to just go ahead and get to our full stock analysis, where I start breaking down, giving you my thoughts on technical levels, my fundamental thoughts, all my thoughts that I can, of course, legally offer you because I'm not an investment advisor, but all the thoughts that I have on all the stocks I'm watching. Of course, this is for Newsbeat Live members only. We are the fastest growing trading room in the nation. If you are interested, there's a little link in the description. I hope you guys enjoyed the Newsbeat show and found value from it. Happy trading, make money, and we'll see you guys tomorrow morning on the Newsbeat Live trading broadcast. Have a wonderful, wonderful, blessed evening.